All right, so I'm going to be going over the 4-hour power of 3, how I use this within my trading, how you can use it to your advantage. And before I start, I'm going to say not every 4-hour candle is a distribution candle where there's going to be a large move. So at the end, I'm going to be going over ways I use to determine if we're going to see a distribution candle. And I'm going to be using and showing an example. But first, I'm going to be going over this setup here that I took on Thursday, as it was very textbook price action. So to start, going into the 4-hour power of 3, we just want to see what price is looking like. So we see we have this move lower that's taking out sell side liquidity, all of these lows in here, as well as whenever we're on the hourly chart, our draw is still higher. We had buy side resting above this high here, and we have a 1-hour FVG up here that I wanted to see traded to. We didn't end up trading to this until Friday, but we did trade to this on Thursday, which was very nice. And this move back lower here was onto a 1-hour order block that I have marked here, which was also a 1-hour breaker. So now moving back down to break down the setup. So going into the 4-hour candle, we're going to be marking the open. So we have the 4-hour open here. So what do we expect in candles? You expect to see your accumulation, your manipulation, your distribution, and then your expansion or reversal. So hour 1, let's look what price did in here. We didn't have any setup in here. And then finally, they started chopping it right in here. This is how you knew we were setting up, because then they give an aggressive move lower through this trend line liquidity, because when we're chopping like this, we're engineering up liquidity and we're leaving equal highs. So we're just seeing accumulation within here. And then they give an aggressive move lower onto the 1-hour order block, taking out this sell side liquidity. And when you see manipulation, it is projectable. And you can see here with standard deviations right into 3.5 to 4 as we're hitting the 1-hour order block. So I was pretty confident in a reversal from this point, as we were also seeing the low of hour 1 swept out, and we're seeing the low of the 4-hour range being formed here, which is the wick of the 4-hour candle as it's under the open. So then here, as we displace back up and form the BPR, that is where I went long right in here. And then you can see we get distribution higher, and then we started the buy side of the curve. So then here, that's where I talked about when we saw this dip back down, I said moves below old lows on the buy side of the curve will be false market structure shifts and turtle soups. And you can see here, everyone that saw this as a market structure shift and tried to short this FVG got fucked. As you can also see, this move back down to take out this internal liquidity, look where it went below the 4-hour open. You can use these opens just like how I talk about midnight price. Very nice price action here. As well as whenever we zoom out, we were below midnight price. Midnight price is here. So we're below midnight price, and I'm going to even mark it out just to show you that they give a second long opportunity. So we have midnight price marked out here. Every real price swing comes from the manipulation of midnight price. So here, this whole time we're seeing manipulation below midnight price within the 4-hour power of 3. So we're expecting distribution higher above midnight price, and then the 4-hour power of 3 is playing into that as well, as we're seeing manipulation here. So then going into hour 3, because hour 1 accumulation, hour 2 manipulation, and then hour 3 we see distribution. And where was that to? 2 to 2.5 standard deviations, because down here at the low we have our institutional swing point that we can project off of. And you can project the 4-hour range, you can project daily ranges. Standard deviations will tell you what's happening. And here we hit 2 to 2.5 standard deviations. And where was this also at? Above midnight price. So here was the reversal back for the internal liquidity again, below an old low, false market structure shift. And then they rallied it, which was also onto the breaker here from hour 1. So we're on the buy side of the curve. Moves below old lows, false shift or turtle soup, and they see the aggressive move higher to 4 standard deviations, or 3.5 to 4 standard deviations to cap the range, as it moved back down to close the 4-hour candle, as it was making the high of the wick for the 4-hour candle. So this is very common within price, not just within the 4-hour candle. There is a power of 3 for every candle within price. But like I said, you need to have ways to determine if it is going to be a distribution candle. So now I'm going to be going over how you can determine if we are going to see a distribution candle in price. Before I get into the example, I'm going to be going over some ways to determine if we are going to see a distribution candle, or if we're likely to. After an SMT, if we're reacting off of a higher time frame array, after we have purged liquidity, standard deviations can tell you, and failed swings, which sets up for low resistance liquidity runs. So here, all of these lows in here are failed swing lows, setting up for a low resistance liquidity run, as well as we see this move above this high, taking out buy side liquidity. So we see our liquidity purged. We also have an SMT here at the highs, as the other index failed to make a higher high here. And I believe one of them made a higher high on this high, while the NASDAQ failed to do so. So we have our SMT, our higher time frame array, and liquidity being purged. And then here on the 15-minute, this 830 data is what takes out buy side and gives the displacement down here. This is what was key, because that's what created the 15-minute breaker. And within the 4-hour power of 3, 4-hour time frame pairs with the 15-minute. So here we have a 15-minute bearish breaker inside of the 4-hour candle. After we've seen a recent accumulation 4-hour candle, now this new 6 a.m. 4-hour power of 3, we go up, take the last 4-hour high and buy side, hitting our higher time frame array. We have our SMT at the highs, displacement to where? 2 to 2.5 standard deviations. So what do we expect here? It's our first reversal point or spot of reaccumulation for redistribution. So how do we know to expect that this is going to be reaccumulation here on this move up? Well, we have our bearish breaker lining up with our time frames, and we're leaving equal lows here. We're leaving equal lows. So it gives the move back up. Notice where else it goes above the 4-hour open. It even gives the test of the daily BPR again, but then there, the close of that candle told the story. We're holding the breaker, and then they start distributing it lower. Where to? 3.5 to 4 standard deviations, which usually caps the range. And in this case, we did get a move back up, but we came up just short of these equal lows, which then gave the next leg of distribution lower. But within that, you still would have been fine, because the 10 a.m. candle closed here. So this was a very good example here of the 4-hour power of 3 again, and other ways you can use to determine if we are going to see a distribution candle. So this is all I have for this video. I hope you got something from it, and have a good one.